So I already know what some of you might be thinking. Why the hell would you want there to be a stock market crash? Surely, if you're an investor, then you want the prices of your stocks to just go higher and higher, like they have been over the past few years. The more they go up, then the more money we all make, right? Just simple as that. Well, no, actually, I don't think that investing works like that anyway. And in this video, I want to make the point that a stock market crash could be one of the best things to happen to investors, especially if you're brand new or even just getting yourself started. Hear me out. Let me explain. Right, you might have seen that the stock market has taken a bit of a turn over the last few days, and we're no longer calling out all-time highs. The famous S&P 500 is down about 3% since its peak. The Nasdaq 100 is down even more at almost 5%, and some of the biggest popular stocks are down way more from their highs. Names like Tesla, Palantir, and others are finally feeling the effects of gravity, which they have seemingly ignored for so long. Now, this has got a lot of people worried, and it always amazes me just how quickly people can go from feeling excited and bullish to scared and afraid. Alongside this, we've also got a lot more panic around new tariffs being put on China by the US, gold pricing is close to all-time highs, and Warren Buffett is holding more cash than ever before. At this point, it does feel like we're all just waiting around for the inevitable stock market crash. You know, the one that's been called for every day for the last 10 years by at least a very few strange-looking men. Anyway, assume that it does finally happen and the stock market drops 20, 30, or even 40% over the next 12 months. Why is this such a great thing for investors, especially brand new ones? Firstly, think of it like this. Let's say that you're just about to invest into the stock market with your first £50, £100, or even more. You might have watched some stuff from people like me who try and make lots of useful videos to help beginner investors get started. You might have read some really interesting books, and you might have even spoken to that one friend at work who won't shut up about how much they've been making with their investments. There's always one at least. Now is finally the time that you've built up the courage to take on the stock market and finally build some wealth that you've always dreamt about. But knowing your luck, as soon as you put that first investment in, literally on the day, the stock market drops and drops some more, and before you know it, all of your investments are showing in the red. It's facepalm time, and whatever you do not tell your partner why you're staring at your phone in despair at the dinner table. Now, this might feel like the end of the world. I've been there, I've done it, and I know exactly how it feels. When I started, I'd be checking my investing account every 15 minutes as if I was waiting for a reply from a girl that I fancied on MSN Messenger. You ignore them all day at school, but then expect an immediate reply as soon as they show online. Expert strategy. Anyway, zoom out for a second and think of it like this. Not about MSN Messenger, your investments. Let's say that you're now staring at a 30% drop after putting in £200. Your account value now shows £140. It's all over, it's time to sell and just go back to your post office savings account that your nan set up for you. Maybe not quite that bad, but your mind is going to make this out to be terrible. However, think of it like this, and your entire perspective might change. If you are a long-term investor, someone who's looking to build some wealth over many decades, the first deposit means absolutely nothing. I know it will feel like the end of the world, but after many months and many years, it's almost totally irrelevant what happens to that first investment. You'll have so many more times to invest your money. It's not some one-off event that you never get a chance to do again. It's a journey, not a destination. None of us know what is going to happen to the stock market tomorrow, next week, or 10 years from now. But I do know that if I don't get started now, it's going to get harder and harder to do it from a psychological point of view. Put it this way, you could either get really lucky or really unlucky every time you invest, or just somewhere in the middle. Nobody will know until many years later what you should have done. However, if you do nothing with your money, we all know that it will get its value eaten up by inflation. So this does put us in a bit of an awkward situation where we do at least need to do something with our money. Another way to look at it is like this. Imagine a month has passed from your first investment and you're still deep in the red. You're now ready to make your next investment of another £200, but you're not quite as excited as you were the first time. You have to flip your mentality around and consider this next purchase a discount on what you paid before. Now, just imagine you're in your favourite shop and the thing you love most in the world, whether it's ice cream, technology, perfume, or even tiramisu, is on sale at half the price. You'd instantly buy it, and probably buy more than you would usually, as it's not often on sale and you've never seen it so cheap. All I'm thinking about now is that Manchester restaurant with tiramisu in a drawer. So good. Investing should be viewed like this, but it almost never is because our little chimp brains are so afraid of losing money that it ends up paralyzing us from doing anything. Now, there's no easy way of changing how we feel, and this part is always easier said than done, but one of the only ways to get around this problem is to automate your investing as much as possible. Now, for me, that means that I invest every single month without fail, no matter what the stock price is doing. I don't care if it's at an all-time high or if it's just crashed. All of this information is totally irrelevant for me as a long-term investor. Again, it's very easy to talk like this, but it's much harder to do in practice. However, the more you get used to it, the easier it becomes and the less you have to worry about it. Okay, the next point I wanted to make was this one. Stock market crashes and corrections are a feature of the market and they're going to happen no matter what. So knowing this, you need to be ready when it happens because it is almost an inevitability that at some point it will happen during your investing career. For example, did you know that on average, the stock market will go through a correction every 1 or 2 years? That's a drop of around 10%. They typically last around 3 to 4 months, but they can also be a lot shorter or a lot longer. As usual, nobody knows how long they'll last until they are over. Secondly, a stock market crash happens approximately every 10 years or so, at least when looking back in the past. This is when the market drops 20% or much more, like it did during the dot-com bubble and the global financial crisis. These things will happen. Now, the hard bit and impossible thing to know is when they hit and how long they'll last. Knowing this should make you a bit more prepared when it does happen, but I do realise that this is easier said than done yet again. On the flip side though, to be a bit more positive, what about this fact for you? On average, the S&P 500 at least hits new all-time highs 15 to 20 times per year. So the point here is that crashes, corrections and all-time highs are just part of the ride, and if you want to enjoy any of the gains in the long term, you'll have to put up with all of these features. It's like saying that the stock market is like riding a roller coaster. You're scared to get on at first, you'll definitely be nervous once that bar shuts on you. After the first ride up, you might enjoy some of the views, but then the massive dip comes and you get held up there for ages and then you panic. But once you hold on for dear life and then you get to the end, you realise that you actually did enjoy it and you maybe want to do it all over again. Or you could be sick and want to go home. I guess that's always a possibility. The point is, get used to them. They're going to happen whether you like them or not. Now, another reason that a stock market crash right now would actually be a good thing for investors, especially if you are new, is this one. If you've only invested a relatively small sum of money so far, maybe for a few months or even for a year or two, but then all of a sudden the market crashes even 50%, it's much better to have that happen right now than towards the end of your investing career, just before retirement. There's nothing complicated going on here. This is just the maths and the reality of investing. For example, if you have £5,000 invested, a 50% drop is going to take you to £2,500. But then you might have decades left to invest. So really, this should not bother you at all. Now, someone who's been investing for decades might have £500,000, and a 50% drop would be a lot more painful to stomach, as they would potentially lose 250k. The point here is that if you could choose when you wanted to have a stock market crash, which is a nice place to be, it's always going to be at the start of your investing journey and not at the end. Yet, going back to the point I just made earlier, it's the fear of a stock market crash which stops people from getting started investing in the first place, which is the complete opposite of what it should really do. Now, just a point in case people in the comments say, I'm about to retire, how dare you wish for a stock market crash? There's loads more I could talk about when it comes to the end of your journey. This probably needs to get a whole good video to talk about, but for now, I will say that investing or retirement is not some one-off event. If you were to retire during the start of a stock market crash, then you should have been ready and prepared with cash anyway, whether that's in the form of savings, money market funds, or even short-term bonds. This would be the case regardless of what happens, as you'll want the majority of your investments working for you many decades to come. Anyway, all I wanted to highlight here was that a stock market crash would be much better at the start of your journey, and it would actually make you a much better investor in the long run, as you get to really experience what one is like. Now, I'll say it again, but all of this is so much easier said than done in practice. All I can do is try and explain what you might feel like using my own experience, but unfortunately, I can't tell you how you'll actually feel when it comes down to it. What's the solution to all of this? Well, just like before, you need to try and remove all of your emotions from investing. And I do this by automating as much as I can. Like I said before, on my investment apps, I have it set up so I invest every month automatically and I don't think about it for a second. I just see my investing like any other bill I have to pay, like my mortgage. As the months pass, this just gets easier and easier, at least that's what it feels like to me. On that note, if you want to know what apps I use for my investing, I do leave links in the description below, and I also have a handy spreadsheet which covers the most popular providers and compares them to each other. If you follow the link for that, pop in your email, I'll send you over that spreadsheet right away and you can have a look for yourself. Now, more than 7,000 people have done that so far, and I'm always grateful to receive your feedback if it helps you out. Also, I've done a video recently explaining how I have all of my investments set up, so feel free to watch after this video. It's the one that looks like this one, covering my 2025 investing plan. Okay, the final reason I think a stock market crash should be welcomed or just not worried about at all is that for long-term investors, I truly think that it just doesn't matter. I like this analogy that I once heard that describes the stock market like a young boy or girl high on sugar in the short term. They're all over the place, anything can happen on any given day, and they go from zooming around with smiles to crying on the floor the next moment in a temper tantrum. Now, I'm sure you can all imagine that one, and this is very much what the stock market does in the short term. It's highly volatile, unpredictable, and can often swing in directions that we'd least expect it. However, in the much longer term, when we zoom out and we think in years and decades rather than days and months, this sugar high chasing young kids becomes a much more calm and chilled out child. Now, don't get me wrong, they aren't some angel here and they still cause you a bit of pain in the backside, but they get their homework done and they do their chores on time. Long-term investors should not worry about the same things that short-term traders focus on. All of the short-term noise should really have no bearing on what you do from day to day and how you live your own life. There will always be something somewhere that creeps out of the woodwork, giving you a reason not to invest. This will probably be the same today, next week, and 10 years from now, as those headlines and YouTube videos keep getting those clicks which always claim that a crash is just around the corner. In reality, these people have predicted 10 of the last 2 crashes, and I think the same suspects will keep on doing this so long as they have something to sell you, which, hint hint, it's usually a precious metal or their own fund with very high fees. It's very profitable to sell fear, and I don't think that will ever change. If you ever want to truly zoom out and think long term, I always like to refer back to these stats. Now, obviously, we can't predict the future based on any of this information. However, it's really interesting to look at anyway. If you are a long-term investor, the longer you can stay invested for, the more likely you have been to make money investing. It's as simple as that. Over any 20-year period, rolling all the way from 1926 until now, there's never been a period when you've had a negative total return, at least in the S&P 500, where we can get lots of good data. There's been some times when your returns have been pretty low, some when they've been extremely high, but absolutely none when they've left you with less value than you started. This is really because of 2 big factors. One, the longer you invest, the more time you have to ride out those short-term booms and busts. Nothing lasts forever, so whether it's a bubble or a stock market correction, eventually the market sorts itself out. And secondly, remember that in the long run, when you invest, this is what you are truly doing. You are taking your money and you're buying a very small slice of some of the best businesses in the world. This means that you will own shares and therefore be entitled to any future profits that that company makes, even if it's a tiny, tiny fraction. When you're an investor, you become a business owner, and by doing that, you put your money to work. Now, it's never guaranteed to always work, and plenty of businesses fail. In fact, most companies in the long run will fail. However, for the ones that do succeed and end up generating huge returns for their shareholders, I know that I'd want to be one of the people that ends up benefiting from their success. Again, what's the alternative? Not investing? Keeping our money in a savings account, or just not doing anything with it at all? Well, whether we like it or not, we have to do something. In 2025, to get those investing returns and start investing, it could not be easier than it is right now. So whether we're heading into a stock market crash this week, this month, or even in the next few years, I think it really doesn't matter at all to long-term investors. And like I said earlier, if you could have a choice, you should really just welcome it with open arms and get used to it, as we're probably going to have a lot more of them during our investing journeys. I'd love to know what you think below in the comments. Let me know. Now, like I mentioned before, if you want to see all of my investing plans for the year, you can watch this video if you haven't already. And if you want a nice, easy beginner's guide to investing as a total beginner, then you can watch this video here. Definitely share that one with your friends and family if you also want to get them started. I'll see you in the next video. Happy investing, even during a crash.